Hello. In this video I'm going to go over the JSDesktop and show some practical application using a couple platform integrations that we have. Today we're going to look at the crude oil. JS Services Analytics follow a strategy-based trading approach where we look to align our trading tactics with the market state condition that complements it. And so the first thing that we always want to look at is what's the underlying foundation, and that's the market state condition. You know, if trading is a chess game, all your tactics are the pieces of the game, and the market state condition is the board. So this is the base. It's real important to always be aware of what that base foundation is and what the attributes of that foundation are. And so in crude oil, we're in a bear trend, and a bear trend is defined as a market that's making lower move lows, lower move highs. The attributes of that state are negative bias, negative trend, volatility can pick up. It's a good momentum trend state. Doesn't mean that we're going to have a linear trend down. Today could be one of those corrective rally days, so there can be corrective pullbacks. And those pullbacks, we're expecting any positive price action is expected to exhaust below the high inflection point that will maintain structure. So it's this market state is real key on what the structure is. Lower highs, lower lows, that's structure. If we do get a break in structure, it's more likely to produce a neutral shift rather than a positive transition. So if we do break this structure of this bear trend, more likely we're going into neutral than we're going to have a positive shift. And again, those are just the attributes of any market that's in a bear trend. That's the base, that's the foundation. Next thing we want to look at is what the structure of that market state is. And we define the structure of a market with 3 price points. So we have a sentiment bias. We call it our R level, over-under number. It is the line in the sand for the trade period, and where that line is based on that market state condition is going to skew it. It's going to affect the bias. And then we also have what we call our critical range, which is defined by the UP upside pivot and DP downside pivot. This is kind of the area of indecision, the neutral zone where the market's going to make a decision to what direction it wants to go, or is it just going to be more of a neutral digestive trade. But these 3 price points form out the structure of the state. So for crude oil, we're in a bear trend, and here's our structure. We have the R level equal to the upside pivot. The R level may be in different places on the price map. So there are actually 9 different skews of where the R level can be. When the R level is at the upside pivot in a negative trend, it's in confluence with the negative trend. So you've got negative sentiment in a negative trend state. However, if the R level is below the market in a negative trend, it's actually giving us more of a positive skew. We have more of a positive expectation. We're in a negative trend environment, but with sentiment below the market, we have a corrective expectation. So where the sentiment bias is going to skew the state. So it's going to change things. We've all been in trending markets that are in a corrective rally, and we're not expecting that rally to follow through. But we also know that as long as we're above that price point, that structure low point, the bear trend cannot engage. It's going to stay corrective, and then once we get a failure here, then it can engage, and now the trend is in line with sentiment. Again, the key thing that we're pointing out with these analytics, which are quantitative, is the structure of the market. This is market structure. So we have a backdrop of bear trend, and we have our structure points where we've defined the sentiment bias is equal to the top of our critical range, upside pivot. And then the downside pivot is representing that lower trough where we could see follow through to the downside. One thing about this critical range that's important, we have the extremes of the upside and downside pivot, and we also have a midpoint. And this is what we call our directional. It's more of a rotational number. Market's above the directional, it's leaning positive. It's below the directional, it's leaning negative. And then this range can be further divided into what we call some minor levels. Our critical range positive and negative, the interior critical ranges levels, and we also have our extremes, critical range extreme positive and extreme negative. And again, this is the structure of the market. So there's some things that the markets do around structure points. Sometimes if they're going to have a digestive rotational day, these interior critical range levels will contain the market, and that makes sense because the market's coiling, it's digesting tighter. If we start to move through the critical range positive, that's a tell that the market wants to make a play for the upside pivot. Sometimes it'll just go straight there. Sometimes you might get a pullback. That'll be a function of the market state. So if we're in a bear trend and we get a breach here, we're in a corrective rally, it might be quicker. Versus if we're in a neutral state, we might expect more stop and go action. And if we do get a breakout of the critical range, these extremes can act as flush points. So that can be the exhaustive squeeze of where all the stops get hit above the upside pivot, and they exhaust out below that point. So this CRX plus and CRX minus act as good confirmations to a breakout of the critical range. Once we get a breach of that CRX plus or minus, it's a tell that the market is breaking out. Again, it depends on the market state condition. Is it going to just go quickly? Are we going to have a pullback? We could have a pullback back to the CR minus, but we still maintain that negative sentiment. But this was the trigger, the tell. Again, all this is just to improve your market state awareness, so you have a good understanding of what the conditions are. And then we're going to monitor price action within that market structure. So today in the crude oil, we have 42 even is coming in as the upper peak. So this is the structure high point. So any rallies into this area we'd expect to exhaust. And if we do get ourselves into an opportunity at these levels, we can anticipate potentially the resumption of a bear trend. So on the strategy tab, this commentary is going over the R level position. So it's given, sentiment bias is negative because the R level is above the market, and this commentary is, talks about how does the R level influence the market state. Trading below the R level will keep the market vulnerable to a negative trend move. So the market's going to remain hard pressed below the reversal level. One thing that can happen in this state is the market's already negative. It can open lower, give you a false breakout, and then rally all day. So again, we're just setting our expectations of what's the condition and what's the structure of that condition. And then because we're in that state and because we're in that structure, these are the optimal and the hedge strategy themes. So optimally, what do we want to do? We want to fade momentum into this area. We want to execute a sell R fade. The other thing we want to do is a sell UP reversal, where we have it go through and then come back down to the opposite side for a sell opportunity. And that makes sense. We're in a bear trend. Best place to sell a market is at our sentiment bias, at our upper peak. The market may not give us that opportunity, but if it does, that's our leverageable trade. That's where we want to really spend our money. So any other sell opportunities that are away from this area, we want to risk less. We should have lower size. The farther we get away from risk and our optimal, the lower the amount of size. And if we break structure, we've got two different strategies. If we rally, if we break structure here, that's going to signal that the bear trend is no longer true, and we're going to have some different strategies to take advantage of that break in market structure. And one of the optimal ones is going to be a buy R breakout. Market break structure that confirms this market's no longer in a bear trend. Markets are always in transitioning from one state to the next, and this bear trend is no longer true, and we're in transition to more likely a neutral state. Could be a bear trend corrective state, could be a positive transition, but more likely it's a move into more of a digestive state. So we need to take that into account if we're going to execute this buy R breakout, because that may just be a difficult choppy rally. Versus the other optimal strategy would be a buy DP reversal. So that would be if the market goes below the downside pivot, gives us a false breakout to the downside, and then pops back up above this support level, this 40.25. And if that happens, we would expect things to get a little excited, because all the sellers got excited and they got flushed, and now this buy DP reversal could produce a quick, sharp corrective rally. So we have our state, we have our structure, and we have our strategy themes. That's the foundation for the session. And now what we want to do is we want to look at price action within that market structure. So here is an intraday chart. This is the start of the session, December 4th. Here's midnight, and we're coming in to the European opening. We know we're in a bear trend market state. We know our upside pivot is at 42 even. That's our optimal sell area. We know that this is the lower structure point, so this represents here. So we have a clear picture of where's the current price action within the market structure. We're going to be watching price structure within market structure. So when we're talking about price structure, we're talking about markets are expanding and contracting. They expand and contract at different ways, but when they do expand, they build positive structure, which is higher move highs, higher move lows, or lower move lows, lower move highs. And if we stop making higher move lows, that's a break-in structure. It's a break in momentum. So we have kind of a first structure break and a second structure break. So we get our first structure break. That's a tell. This trend is slowing. Something's happening. You might be in for a digestive period before it can start to trend again. And if we break second structure, the trend is over. It's no longer trending. It's in neutral, or maybe we're shifting into a negative expansion. So we're going to watch price structure within market structure. And we're always looking for the textbook move. We're reading a book about a positive move, and we're long the market. It should just perform like a textbook. It should just maintain a positive structure. And if it doesn't, that's a tell that this is not a perfect move. And if it's not a perfect move, it's going to change and things could be different. And so then we need to adjust our tactics, or we need to adjust our position management. So here we have a market. It's opening up above the directional. This is an important point on a bear trend. So we have a bear trend that's opening above the directional. This gives us more confidence in selling this area. And the reason it gives us more confidence is that if the market starts to break below the directional, that's actually a tell that the market is working lower market structure. Just as we're looking for negative price structure, that's our tell that the market's starting to work negative market structure. And if it goes below the directional on a bear trend, it should stay below the directional. So that would discount a rally up here. The market's already starting to take off. And if we get that pullback, it's actually, it's a little positive. So it's going to take a little bit away from our expectation. So this is important, that the market's opening above the directional to set up a potential sell-R fade. If we were opening below the directional, it should stay negative. So I'm going to add some metrics here. We've got a variance. So this is really the ideal kind of entry area. And then we have an alert distance. And this alert distance tells us, kind of what side of the inflection point are we on. Are we on the positive side or negative side? And currently we're on the positive side of the directional. And we can see that because we've had this push up through here. We also have some minor levels. So this is our Sierra Charts application. We've got some different charting platforms that we integrate with. This is one of them. And this one is shows you those variance bands around these inflection points. And so we can use those for our entry. We can use those for our really you want to use these areas for signal acceptance. So if you're getting a buy or a sell signal, you want to maintain that signal acceptance within these zones and stay out of the middle. These are the market structure areas, and then at market structure, that's where we anticipate more liquidity. We anticipate more fund participation, because if the market is going to do something or change structure, transition to a new state, it's going to do it from one of these points. So you're going to have more funds are going to be coming in here. Versus in the middle, it's more algo driven. And so this is a minor level. It's definitely not as interesting as this level. And we know this is the most important level because that's defining the upper peak of the bear trend. So we're in a corrective, currently we're in this corrective move. If you're getting a buy signal right now, you got a couple negative things going for you. You're below this CR plus, and your profit potential is limited to here. This market structure can help you with your, what's the real opportunity? What kind of size do I want to trade? Absolutely, we're anticipating a rally up to this level. Better probabilities to sell fade this. So if we're trading from the long side here, we want to trade smaller and more like a hot potato, and we don't want to lose sight of the real opportunity. Another thing that's important about a fade, we're looking at this positive price structure, and in any time a market is really working good positive structure, we want to be cognizant of that as we're coming into potentially stepping in front of that momentum. So it's nice to have some confirmation of a break in momentum before we come in and fade something. This is a fade strategy, so you could add a oscillator, so an overbought oversold indicator. I've got a 3-minute chart here. This might be a little fast for this oscillator, but one thing we need to understand is that when the market is in this kind of trending area, the oscillator is going to be a little deceiving. So talking about size management, if we have a market that if we have an optimal strategy, we can look at this as a 3-unit opportunity. A hedge strategy more of a 2-unit opportunity, and other trades at other areas of the price map should be more 1-unit opportunity with like a 1 unit of discretion as well. So now we're into our upside pivot. So here we have the market coming into our variance. So you can see it tests the variance. This is really the optimal entry area. You can use both the alert distance and the variance. So if we look at the different optimal hedge strategies and other strategy setups that happen within the market structure, the optimal strategy themes would be like a 3-unit opportunity. Hedge strategies would be more like a 2-unit opportunity, and any other trades really 1 unit. And you could have a 1 discretionary unit, so a maximum of 4 units, whatever your unit size is. And so in this one, this is a 3-unit trade, potentially a 4-unit trade, and you could spread your orders, looking to participate as soon as we get into this alert distance, at the figure. Maybe you've got a certain rule event that you're looking for to happen, or your trading tactics are coming into play. As soon as we enter this area, then you're allowed to sell. So if we're putting a couple units on, and we're sitting on the sidelines with 2 more potential units that we want to trade, or 3 units, we could add those other units if we get the upside pivot reversal. So if the market squeezes us and comes back down through it, we don't get stopped out on anything, we can start to leverage up. One thing about this work and identifying these structure points is we get what's called an average price map distance. So it helps us to identify the segment moves the market's trading in. So the market likes to trade in these full segments or half segments. So that's where the minor levels can come in, which kind of identifying these half segment moves and full segment moves. So for selling the upside pivot, that's the optimal strategy theme. So we need to understand that if we're selling it here, we're anticipating a move to here. So if we have 3 units on, if we only have 2 units on, we're going to want to go for 1 unit here and the 2nd unit here. If we have 3 units on, we can go for take one off here, take one off here, take one off here. The market's going to make a big decision here. That might be it. So we can always put our shorts back on. And obviously there's a lot of trading that can go on within this. What's important to recognize is the theme. And when you're trading, what is the strategy theme that's in play? So here we've got, let's put our metrics back on here. So here we're getting a breakdown in market structure. So not only do we have a break in price structure, so on price structure wise, we can do a simple trend line. If we want to draw a trend line here as a guide, we could use simple moving averages as well. The market has broken positive structure and has confirmed this theme. So we're in the fade theme. So we're continuing to look to sell against 42 even. We're looking to sell against the R level. So the market was building positive structure. We came up to our resistance point. Now we're looking for negative structure. Can we build some negative price structure? We are coming into the US session. So things are getting a little excited. And we're getting a retest of the R level. So we take a look at the CR plus, and so the market did stabilize there. The market kind of held that variance. So it didn't. If it broke underneath this variance, been more negative. A lot of times this will happen where the market will come up into an area, top out in front of it, start to look like it wants to go south. So you have this strike, strike, strike. Okay, we're going lower, and then they give you a squeeze rally right back into the figure. This is a classic setup that happens a lot. You have it documented here. This is on the buy side where you have a strike in, they stabilize, and then the buyers are getting happy, they get to add, they're getting happy, and at this point they break this structure and everyone's really happy. And then you have that sharp move. All this structure was built up in front of the real price point. And then you have this sharp move against it to the price, and then quickly it moves away. And this will happen a lot. You see it when like the market profile might build up and you get some good action in front of really where the market structure point is. And so at this point, it's coming into this area, sellers are getting involved, and at this point it's starting to look like it's going to roll over, and then you have that sharp move into structure, and then quickly it moves away. So again, that's another tell. And so here you have an opportunity to add. So if you did get squeezed, shaken out, having the awareness that this market can squeeze, and one of the optimal strategies is a sell reversal, so it can squeeze up through here and it's still bad. So you need, just being aware of this is the backdrop. We're in a bear trend. This can be a dynamic area. It's a sentiment bias. There could be some play. Always having that awareness, and then when the market tests here, this is a good tell, and this sets up an opportunity right there to re-engage or to work the position. So what theme are we in? We're still in this optimal strategy theme, so we're selling strength. We're selling strength against here. We're anticipating this market to start to perform like a bear trend. And here the market just pays us out. So this happened really fast. We never, the market likes to trade in those segments. So this was a full 2-segment move. So we just kind of clean this up. We have, a market that had a 1-segment move on a corrective rally into our optimal area. It gave us a test of that area kind of pre-market. So this is all still the European time frame, and then we have coming into the regular session, we have a squeeze right to the figure. Again, it's just being aware we're at this point. It's a major inflection point. There could be some play. Markets like to play a lot of games, and they play games. They're playing some games here. Then the market pays us out a full APMD, and from this point, though, our textbook expectation is the market's coming here. And now we need to make a decision, and let's take a look at that variance, that alert distance. Is the bear trend ready to resume? So a lot of this is happening in the European session. So we're coming into the U.S. session, and the market's already paid out twice. It paid out this full APMD on this corrective rally, and we have a 2 APMD payout. So if we're covering here, we're still working the negative momentum. Is the market going to break out to the downside, or we're going to bounce back into more of a digestive trade? And so we can use these metrics to get a sense. And here we're confirming a lower trade. And so we're coming into that CR minus, and now we've confirmed it. So now this is, the market's in an aggressive sell position, and it should stay below the CR minus if it's going to stay real aggressive, and it doesn't. If this aggressive selling was going to continue, you can see how the market just, worked this market structure. It broke through the structure and it stayed below it, and at this point, it breaks through to the downside, and then it breaks structure here, market structure here. So this is a tell. This is an exhaustive tell, and so now this would be the second structure break point. This is a tell that there may be a pause in this aggressive selling. So it's important to understand is we're in a bear trend. We did already have a 2 APM, a big move to the downside. So having a breakout below here in the market exhausting, we need to be, that makes a little bit of sense. What they do, they broke out below here and they hit our CRX minus. and they took it out and they confirmed. They said, okay, we're really going to go, and then immediately they pop back above it. So this is a bit of a tell for this corrective trade. Holding this variance here, they're still negative. This is really the high point for a market structure because this is the first structural break, second structural break. But the big point is that we broke a little structure here. We broke a little momentum. We've already had a pretty good payout to the downside. Are we going to have an event day? That's really what we to be aware of. Are we really in for an event? And so if we are, this market will start to trade back underneath the CRX minus, and that'll be the tell to jump on this thing. Otherwise, we could have more of a digestive trade. The market broke structure, we had a big sell-off, and maybe we're going to digest and wait for the next session. So here we're getting back on top of the DP, potentially setting up a hedge strategy theme. We really need to see it break this structure here to get us to kind of switch and to start riding this positive. This low is positive. It's still, we still have this price structure here and this market structure here that's keeping this market negative. Holding the CRX minus here, they traded below there. That would be a good tell that the things are ready to roll over, but haven't been able to break through it. Also, this break in the positive structure has us really at a crux point here. Are we going to have a sideways digestive session, or are we going to continue? And the market's making that decision right now. At this point here, we've got a couple different things in play. We've got a market that took out, again, we're looking at price structure within market structure. So we have the market broke out below the downside pivot, took out the CRX minus. What do we know? We know the market already had a big payout to the downside. Are we going to have an event? Are we really going to let go? And so we have negative structure, but we took the extreme out, we bounced, went to the plus side of the positive side of the DP, and we pulled back and we held the lower variance of the CRX minus, and we're right here. So at this point, we're either going to stabilize, and that's the low, and we're going to have bounce back and potentially a full-on reversal or a digestive trade, or the market's going to price qualify back underneath this variance, and we're going to have a negative event, and the bear trend's really going to resume. So typically on the strategies, we're going to the market's going to be an optimal theme, it's going to be a hedge theme, or we're going to be in a kind of a non-event day. And at the moment, we've had this corrective rally, we had the hedge theme play out, and we're currently in it. But now we had this false breakout to the downside. Here was the tell, and then at this point it told us that we got through that alert distance, so it kind of confirmed it. And then here you got to break back down. You kind of break this structure so you don't have anything real clean. If this was a good reversal, probably should have just gone. So here the market's making a decision. Are we going to extend lower in an event by price qualifying below the CRX minus, or are we going to bounce back into more of a non-event day or potentially a hedge reversal? We were going to have the reversal. Typically it should just kind of, after it did this, it should hold structure here and go and really take back all these gains. So this break in structure here is also a tell, ruining this pretty picture of a scale higher for this opportunity. So and the fact that they held this here is a indication that more likely than not this difficult trade can last through the session. Typically if the market, it was in the optimal strategy theme, we had the first pause here. We don't get it, it's still negative below CR minus, but this broke momentum. Then it tries to rally. It should just roll over and keep going. It doesn't. It stabilizes, and now it's starting to trade back above here. It's more tells of saying, hey, we're not doing this. This is done, played out, and it couldn't rally here. It's more of a sideways expectation, and so we know this is a big point. Is it worth taking an opportunity for half a PMD depending on your tactics? But the expectation is that you're just going to kind of have a rotational trade within this zone. So reading the price structure within the market structure to get some insight, and so we can anticipate opportunities. So we had the optimal strategy theme play out, had the potential opportunity to reverse here, and they couldn't. We held the CRX minus, gave us a rejection here. And even if we fail at these levels here, we're not going to be expecting this type of action. We still, again, the backdrop is bear trend. And, really until we get above this structure point here, we still have to say, we still have some good negative momentum. We're just having a pause in it. And maybe we're gonna get that follow through in the next session. These small structure breaks, they're disappointing when you're short, but they're definitely tells to set up things like this. So it's when when the market shows you it wants to perform like this and it just really rolls, and then you got that good negative price structure, and then here you get a failure on your market structure, but then they can't hold it. At this point, that this is the confirmation point, so they need to be really below here before you really want to be short below here. So being more aggressive on locking in your profits and avoiding this nightmare. This is just a headache. And even if the market starts to come back down here, you really want to be short below the CRX minus. And so this was the initial tell. That was a little bit of confirmation that we're going to potentially go sideways. Holding here was important because you stop this positive momentum, and this is another tell. So you had the breaking structure, breaking this price action, the market structure here, and then you had this breakdown here, kind of foretold this ugly session. It's easy to get excited if you're coming in on the U.S. session. It's easy to say, I get all excited about wanting to be short. The European session, people got paid out, and reading the price action within the market structure and noting that, hey, they were so aggressive, they should stay aggressive, and they didn't. They shouldn't let you get back in. They never do. So if they do, that's a bit of a tell. And then when they hold this variance here, and all of a sudden there's trading here, you have to look at these two lows and say, okay, well, if they're bad, they should be below here. So we could have some sideways action. Where could we go? Well, here price-wise, there's one, there's two. So price-wise, they could come all the way up to the directional. Market structure-wise, yeah, they shouldn't come back above here if you're going to get a chance to go lower. But this can really help you avoid this headache. Really reading that price action and use your energy somewhere else to look for opportunity. So here we're getting near the end of the regular session for crude oil, and we have the market retesting this CRX minus. Okay, it's back on edge. We're in that bear trend. We had this digestive action all day long, so we're still negative. So if we get back below here, that's a fresh sell signal, and we could almost expect it to get more aggressive because now we're free of this whole critical range thing. And the market really just ends up with a lackluster, and the tell was really here that set this whole thing up. They're subtle, but they're always there, and that was the tell. So looking for that. It should really have held below here. The other part of this situation was the fact that they had already paid out over 2 APMDs, and that's a decent payout without being an event trade. And then here you can see they rallied a full APMD, and you can see how that worked within the CRX minus and the CR minus, and that's typical for when they get into these digestive situations. So instead of rotating around the directional, the CR plus and CR minus, they're rotating around the DP with the CR minus and CRX minus. So you'll see that start to happen. You'll see that opportunity set up when you flush through. They hold this. They're stabilizing here. Where can they go? They can kind of rotate up to here. Okay, they stabilize here. Where can they rotate down? If you're going to digestive trade, they can rotate back down to here. And and now they're ending the session pretty much at the DP. For more information, please contact us at info@jsservices.com. Thank you.